Three strategies are explained in this video. The first one is a mix of MACD and RSI with some special settings for accuracy. The second one is a mix of MACD and Stochastic with secret settings for profitability. And the third one is a mix of RSI and Stochastic with unique settings for exact entry and exit signals. Just make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, let's begin with the first trading strategy. For this trading strategy, we need two indicators, MACD and RSI. So here we click on indicators and we search MACD, this one, moving average convergence divergence, and then we search RSI and we add this one, relative strength index. And now we need to change their settings. First, we go to the settings of MACD, and here in the inputs tab, here for the fast length, we set it at 34. And here for the slow length, we set it at 144. And then we go to the style tab and we remove MACD line and signal line because we only use the histogram. Alright, we're done with the settings of MACD. And now we need to change the settings of RSI. So here we go to the settings of the indicator, and here in the inputs tab, for the RSI length, we set it at 2. And then here in the style tab, for the RSI upper band, we set it at 95. And for RSI lower band, we set it at 5. Alright, we're done with the settings of RSI. And now let me show how we can trade based on this. Before we start, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a comprehensive guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, this MACD histogram is used for trend identification, midterm trend identification. By the help of the settings that we made, it helps us to identify midterm trend relative to our time frame. And this RSI with the special settings that we made will help us with short-term momentum changes that are happening in the market. But here we set overbought at 95 and oversold at 5. And so because of this, we are focusing only on very extreme levels of overbought and oversold. And this will help us to focus on higher probability signals where there is a high potential of turning of the price. This is how we do it. When MACD histogram is above the center line and green, it tells us that the price is advancing in an uptrend. Now we want to find a good opportunity to enter a trade in the direction of this uptrend. We want to take advantage of this upside movement of the price and make profit while the price is advancing. And the perfect entry point is when we have a correction or pullback. For this purpose, we use this RSI. We wait until we get oversold signal, which is when RSI line reaches to 5 or goes below 5. This shows that we have extreme oversold in an uptrend. This actually shows that a pullback has formed on the chart. Now we should wait for a signal that shows that the pullback ended and the price is gonna advance more. For this purpose, here we wait for the RSI line to cross above its moving average line. This yellow line that you see here is moving average of the RSI line. When the RSI line is closed above this yellow line, it tells us that we have increased upside momentum, and this shows that probably the pullback ended and the price is gonna advance more. So here the buy signal is confirmed, and in practice we could enter a long position at this point when this new candle was opened. The stop loss for this trade is placed below the pullback and profit target at 1.5 risk to reward ratio. Moving on the chart here, you can see that RSI line again went below 5, but by the time that is closed above its moving average line, you can see that MACD histogram is turned to red, and this shows that now the price is declining in a downtrend and we should look for short position opportunities. In this situation, we wait for the RSI line to reach to 95 or go beyond this level. This shows extreme overbought, and this is happening within a downtrend. So this is probably a signal for a pullback. Now we should wait for a signal that shows end of the pullback. We wait for the RSI line to close below its moving average line. When the RSI line is closed below this yellow line, this shows that probably the pullback ended and the price is going to decline more. So when RSI line is closed below this yellow line, the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the pullback and profit target at 1.5 risk to reward ratio. Please pay attention that although the accuracy of this trading strategy is very high, but it doesn't mean that you will not have false signals. No, losing positions are always part of the game, and you need to manage your risk properly. 1% roll is the best risk management strategy and recommended by professional traders. I have a guide on this, the link is in the description, and make sure you watch it later. Alright, now let me teach you the second trading strategy. In this trading strategy, we have MACD and Stochastic. So here we click on indicators and we search Stochastic. We add this one, which is a built-in indicator on TradingView platform. And then we search MACD and we add this one, moving average convergence divergence. And now we need to give them some special settings and combination so they will give accurate buy sell signals. First, here we go to the settings of the stochastic oscillator, and here in the inputs tab, here for K% length we set it at 7, for the K% smoothing we set it at 3, and for D% smoothing 3 is okay. We're done with the settings of the stochastic oscillator, and now we need to change the settings of MACD. So here we go to the settings of the indicator, and here for the fast length we set it at 100, for the slow length we set it at 200, and here for signal smoothing we set it at 50, and then we go to the style tab and we remove MACD line and signal line because we only need the histogram. Alright, we're done with the settings of MACD, and now let's see how we trade based on this trading strategy. This MACD with the settings that we made, it helps us with longer term trend of the market. When MACD histogram is above the center line and green, it tells us that the major trend of the market is uptrend and we should look for long position opportunities. We want to find a perfect opportunity to enter a trade, and that is when a pullback is forming on the chart. In the next step, we use stochastic oscillator for finding trade entries. We wait for the K% line, this blue line, to go below 20. This shows oversold, and this oversold is happening within an uptrend, and this tells us that probably a pullback is forming on the chart. In the next step, we wait for the K% line, the blue line, to cross above the D% line, this orange line. When the K% line is closed above the D% line, we wait for the K% line to close above 20. You can see that it didn't happen here, and we got closing of the K% line above 20 here at this point. When this happened and we got the K% line closed back above 20, the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the pullback and profit target at 1.5 risk to reward ratio. On the other hand, when MACD histogram is below the center line and red, it shows that the major trend is down, and in this situation we should look for short position opportunities. We wait for the K% line to go above 80, which shows overbought, and this overbought is happening within a downtrend. This tells us that probably a pullback has formed on the chart. In the next step, we wait for the K% line to cross below the D% line and closed below 80. In this case, you can see that when the K% line is closed below the D% line, the K% line is already below 80. So here the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the pullback and profit target at 1.5 risk to reward ratio. Please pay attention that this trading strategy will not give you guaranteed signals, and you need to manage your risk properly, otherwise you lose your trading account sooner or later. 1% roll is the best risk management strategy and recommended by professional traders. The link of my video is in the description, and make sure you watch it later. Alright, now let me teach you the third trading strategy. For this trading strategy, we need RSI and stochastic. So here we click on indicators and we search stochastic, we add this one, and then we search RSI and we add RSI to our chart. And now we need to change their settings. Here for stochastic oscillator, we go to the settings of the indicator. Here for K% length, we set it at 5, and for K% smoothing, we set it at 3. We're done with the settings of the stochastic, and now for the RSI, we go to the settings of the RSI, and here for RSI length, we set it at 21. All right, we're done with the settings of our indicators. And now let me show how you can trade based on this trading strategy. Here we have a RSI with length of 21, and it's going to help us with trend identification. When RSI line is above the center line, it tells us that the price is advancing in an uptrend and we should look for long position opportunities. We use stochastic oscillator to find trading opportunities within the uptrend. We wait for the K% line to reach or go below 20, which shows oversold within an uptrend. This situation shows that probably a pullback is forming on the chart. In the next step, we wait for the K% line to close above the D% line and also close above 20. You can see that it happened here at this point. So here the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the pullback and profit target at 1.5 risk to reward ratio. On the other hand, when RSI line goes below the center line, it shows that the market is trending down and we should look for short position opportunities. In this situation, we wait for the K% line to go above 80. This shows that a pullback has formed on the chart. In the next step, we wait for the K% line to close back below the D% line and close below 80. When this happened and the blue line is already closed below the orange line, the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the pullback and profit target at 1.5 risk to reward ratio. Please pay attention that there is no trading strategy or method with 100% guaranteed signals. Losing positions are always part of the game, no matter how much accurate is the trading strategy or how much experience you have. Trading is a game of probabilities, and the result of every trade is uncertain, so you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.